Let's drill down into some of the market activity we've been seeing, specifically in Kenya, recapping on trade as it played out in yesterday's session. First, we had Kenyan shares falling lower yesterday on the back of profit taking, and that after defeated presidential candidate Raila Odinga filed a legal challenge to the result of this month's presidential election. Remember, Odinga has challenged the election outcome in court, alleging widespread ballot rigging. So in that context, we had the benchmark NSE 20 share index falling back close enough to 1%, as you can see there, ending just above 4,727 points. And analysts saying a swift, transparent resolution of the petition will be critical to restoring Kenya's reputation as a stable democracy, and that following post-election violence in early 2008. The verdict expected to be delivered within the next 2 weeks. On the currency side, moves in the political arena also weighing on the Kenyan shilling, which weakened slightly against the dollar yesterday. Uncertainty really weighing on investor sentiment at the moment, but traders saying that the shilling could get some respite today from dollar inflows as the East African nation holds its weekly tea auction in the port city of Mombasa. Technical charts are fairly neutral about the shilling, showing that it has resistance at the 86.20 mark to the dollar and support sitting at 84.20, with a daily range of between 85.40 and 86 to the dollar seen over the next few days. So that a broad look at the kind of market scene we're looking at over in Kenya. Let's get into some analysis of those markets now with Steve Biko. He's a director at the Hidalgo Group. Steve, thanks so much for joining us. Of course, now that you're off the campaign trail, you've of course been part of the winning camp, Uhuru Kenyatta's team, so to speak. Let's run through your assessment of the election process and where we stand right now in terms of the uncertainty we're looking at, because that seems to be rattling investors in a very big way.
Exactly what's actually happening is that Kenya stands on the pinnacle of history in terms of how the court system is actually going to decide this, given the fact that many people had put a lot of faith in the institutions that we went to a lot of pain to actually develop, the IEBC, for example, and the judiciary system. So what many Kenyans and the rest of the world is actually watching is what will happen in the next 2 weeks. I believe, according to the sub-judice rule, it's improper for me to actually discuss what's in court. But what I know is the elections was actually historic in terms of how much money was spent, how much was put in terms of effort, and how many people actually came out. The voter turnout was historic when you compare to the rest of the African countries. So what we are hoping is that the judiciary will actually look at all facts and actually be fair to the Kenyan people so that the country can move forward. Because when you're looking at the stock market, for example, during the voting period, the market was actually stable. But now we're seeing that it's actually going southwards, because now investors and local investors are actually wondering what's the way forward. And given the fact that the market was very bullish, we're actually looking at the 5,000 point mark. Now we're actually all of us waiting for the next 2 weeks to finish, starting from Monday when there'll be a pre-trial aspect of it, then from next Wednesday and Thursday when the full hearing will actually be done. But what I know is all of us are hinging our future of this country on what the Supreme Court will decide, given the fact that all the facts are open. IEBC is an independent institution, and we believe that IEBC did its work fairly. We believe that a lot of money was spent in actually being able to develop a credible election system, which IEBC did, despite the challenges. And we believe, given the fact that this was a first-time aspect for a lot of things that IEBC did, especially using the electronic machines, challenges were expected. But we hope and believe that the Supreme Court will be fair to the Kenyan people and to the world, to show that Kenya is actually a stable democracy, that it can actually show guidance on how the rest of our African countries can actually be.
Well, we've got investors sitting on tenterhook at this stage, eyeing that political arena pretty closely, Steve. Let's take a look at some of the broader market news that you are managing to digest at this stage of the game. Lots of focus on Kenya Electricity Generating Company specifically. The company saying it will have to spend at least 170 billion shillings annually over the next 17 years to meet the country's projected power demand and to help the country reach Vision 2030 as well. What do you make of the kind of capex spend this company has to put through in order to meet the country's power demands moving forward, and is it viable?
I believe it's viable, given the fact that it's put in place a mechanism to actually raise the funds. For example, it's starting off with a 20-year, 30 billion, bond. But what we need to understand is, given the fact that we just voted in a new administrative unit, we have 47 county governments, which means every county government will have its own needs. We're looking at each county having a lot of commercial and residential energy needs. So Kenyan has actually a lot of work to be done in terms of being able to meet the demands for these county governments to actually be able to function. For Kenya to actually move from where we are right now as a third world country into a second world, mid-level earning country in the next 5 to 10 to 20 years is actually paramount for Kenyan and other related stakeholders to actually be able to meet this demand. Of course, it's shocking to the to industry analysts where the money is going to come from and how they're going to actually do this, given the fact that a lot of bureaucracy, a lot of corruption, a lot of lack of transparency in terms of the tendering process is actually going to be there. But we are hoping that with the new constitution, and how things are supposed to be done, that this can actually be clear and you can be able to see how money is going to be raised, because we believe that we have a vibrant stock market, and we have vibrant stock markets across Africa, in South Africa, in Nigeria, in Mauritius, and in Rwanda. So we're looking at a company that's actually looking at options to be able to raise funds. But also we believe that individual county governments will also be able to chip in through municipal bonds, through syndicated loans with various banks, to be able to push this through, because without the energy, which is key to the overall country infrastructural grid, then I don't see us being able to achieve the Vision 2030 project.
How do you view a player like Kenyan relative to a player like KPLC specifically, Steve? Because we heard just this week that KPLC will have to wait a little longer for the implementation of new electricity tariffs as the Energy Regulatory Commission reviews input from stakeholders, and many saying that this is a delay that may well hurt the profits of KPLC moving forward.
What we believe, when you look at the two farms, the issue or the aspect about Kenya Power is because for them, being a monopoly, the issue has been how its profits have been soaring in vis-a-vis how the consumer is actually feeling on the ground. And the reason why the regulator stepped in to actually freeze the review of the energy tariffs was to be able to be humane to the consumers. I mean, at the end of the day, Kenya Power has been making very good profits, and all of us have been hoping that the profits actually pumped back to expand for better services. But we're seeing a situation whereby services are remaining the same, output is bad, but the company is making a lot of profits. So we're looking at an aspect whereby the consumer aspect or consumer activism is actually rising, whereby consumers are demanding better services in vis-a-vis how much we are actually we're paying out to the company, so that we can be able to get what is proportionate to what we're paying. And we've seen that Kenyan, which at the end of the day doesn't really deal directly with the individual consumers, leaving this to Kenya Power, is something that needs to actually be synergized with the individual company. And also we're looking at, we're hoping that the new government will actually be able to look at how to regularize the competition in the industry, so that if there's competition, then we can get better services, we can get more output than just having a monopoly whereby whose mandate is actually to look at the profits for its stakeholders.
KPLC, though, Steve, coming through with very different commentary. I mean, the utility firm, yes, reported a close enough to 6% jump in profit before tax for the half year to December. But in its application to the ERC specifically, the company projecting that its profit before tax will drop by 53.4%, something that might see investors of the firm receive lower dividends for this financial year as well come to the fore. So that has got to raise a few red flags.
True, it's raising red flags, but also we need to understand that Kenya Power actually embarked on a different plan whereby many consumers will have to pay the electricity beforehand, before they use it, pre-electricity payment mode. And this hasn't gone down very well with consumers, because most of the units had a lot of faulty issues, and they pumped in a lot of money, and most of the projections were based on this project actually being able to work better. Many consumers will actually want the post-paid arrangement, whereby I consume and then I'm able to actually pay after. But also we also need to understand that a lot of our energy has actually gone into cost of production and cost of actually being able to maintain the supply of the energy. So these are the two issues that are actually going to be cause for worry, and that's why you've seen that it was looking at revising the energy tariffs upwards to be able to maintain its profit uptick, so that its stakeholders can actually be able to receive profits. But we're seeing an issue where consumer activism is actually going up. So consumers actually saying no through the consumer body, that we need to understand exactly how this is actually being done. We need to know how the money is being used before you guys can actually raise the tariffs up. Because in as much as we appreciate the new units, which are easier in terms of being able to monitor our consumption, they're actually faulty, and we're being overcharged at the end of the day. So there are a lot of management issues and cost of production issues that need to be addressed by the Energy Regulatory Commission before Kenya Power can actually go forward in terms of reviewing the tariffs.